All right. Good morning, Juan. So, Brokernomics, subject of our conversations for the last few weeks. Wanted to touch upon something that people ask us a lot about, which is, well, ESMA stipulated recently, as you're well aware, the disclaimers or the information that we present at the bottom of our pages, the in terms of percentage of losing clients. People tend to ask, have asked over time, is the percentage of losing clients, as we state, um, a relevant criterion when picking a broker? And I know before you say anything, it's not easy to answer this question without presenting quantified information. So if you could just shed some light on it, and perhaps we can fill in the blanks later with something more data driven. What do you reckon?
Yeah, no, I mean, but I think I have something far more fundamental than the data
Okay.
to
Yep.
begin, and I think I just don't like. I mean, this thing is it's a well-meaning but ultimately I think misguided effort by, in some senses, by the regulators to try and take poor, vulnerable people out of trading.
How
And
do how do you mean, for instance?
well, it sounds as though, I mean, for starters, there's this divide about, so like Ali, when you learned biking as a kid, did you
Hmm.
fall flat on your nose once or twice?
Plenty of times, yeah.
Plenty of times. Now, did you keep going until you learned to bike?
Yep.
Yeah. So, 100% of bikers fall,
Yeah. I
right?
see where I see where you're going. Yep.
Yeah. So I think this sort of negates, this boils down this process of trading for a profit into this alchemy-like mumbo jumbo, where if you've got some sort of God-sent gift, then you make money, and if you don't, then why even bother?
I
And I
quite
think that,
agree with that actually, because I think that this stipulation, I didn't mean to cut you off there, but I think the
yeah,
stipulation was it tends to, and further laws as we see coming out of Europe, for instance, tend to sort of intensify that divide, if you know what I mean, the divide between the talented undercapitalized guy and the questionably talented, highly overcapitalized bunch of people.
yeah. So that's that thing. So basically, if I want to play in the market, and in the beginning I lose, and I see that as an investment, because that's part of the process, then who are you to tell me that this is wrong? It's like the professionals didn't lose. So that's the so that's one. The other one is, that's kind of the nannying by the state, which I don't like. Then the other one is, the market's the jungle, right? We've been talking about how traders are actually alpha-like animals. It's all about the self-improvement, and
Mhm.
it's everyone for himself in,
Yeah.
in in certain ways. So it's just the nature of the beast, right?
Yeah.
So and then the other thing is for someone to, and in many ways it's a zero-sum game. So for someone to win, someone has to lose, and that's just that's just the way it
It's
works.
just it is what it is.
So
Yeah.
you don't like it, well, it's the way it works. So as a matter of principle, I just have an issue with looking at what others around you are doing. I think it's very much a improvement process and journey, and you have to really, as a trader, and I'm not a trader myself, because I'm not willing to put in what it takes to get to be good at it. I prefer to put in what it takes to become a good storyteller, because that's what makes me tick. But I presume if I was somebody drawn to trading, then I would just be prepared to put in the whatever 10,000 hours that it takes to master any skill.
Yeah.
And that still is wrong, because you're never going to master it. It's just you're going to get to degrees of improvement, and being an alpha is about waking up every day trying to be a tiny bit better than yesterday. That's what it that's what it's about, and it doesn't really depend on anyone, not your sister, not your wife, not the other clients of your broker, and not your broker either, largely.
Mm.
Okay, and that brings me to the next point. So to what extent does the broker influence how well you do? Well, it doesn't matter, because the transaction costs are what, if you had a population of random monkeys who didn't know what they're doing, in the absence of the transaction costs, then 50% of customers would make money and 50% of customers would lose money in a mean reverting asset like, say, FX.
Mhm.
So that's that's just how it works. And yes, if if you pay a 3 pip spread on the euro dollar, then you're going to have a substantially higher percentage of losers than if they pay 0.2, 0.3 spread in the euro dollar. So yeah, for sure there is an influence by the broker in that sense. Okay, so there is a bit of that to it. The other one is to what extent are newbies drawn to this thing as opposed to a broker where more experienced hands are around. And the reason for this is that we have seen a very, very clear improvement to ESMA's credit in the performance, the absolute performance by customers, in that probably the percentage of winners and losers is more of a function of how much volatility there is in the market.
True, yes.
But what's changed massively is the absolute amounts of money lost and the periods that it takes to lose them. So before ESMA, with excess leverage, people lose their shirts very quickly and they quit before they even learned how to, in a way, if you kind of bang your head against the wall the first time you grab a bike, then there's odds you never grab a bike ever again. Okay, so
Yeah,
so
I agree, and I think to ESMA's credit, bringing this restriction in has also been educational, I think, for retail audiences.
no, I think it's been a great thing. I mean, like I think with ESMA has been great in the sense that when what had to be done was reducing the leverage, and it had to be done because it resulted in lots of people losing way too much way too quickly before they even realized what was going on. That was point one. And then point two is that actually it created this competitive pressure whereby brokers extended more and more leverage, which introduced a big risk to the companies. So we're now saying this in the period of the coronavirus, and I thank God that ESMA introduced this ESMA leverage restriction,
Yeah.
because if they hadn't, a 35% drop in oil, whatever it
Oh,
was, that would have been a
carnage.
massive problem in terms of negative balances and so on. So I think it was a great thing. The other great thing it did is that just as the leverage took away the systematic losing behavior by the customers, which was the flip side of the systematically profit-making by the B bookers. And the systematic profit by the B bookers was what funded the awful, like the large-scale campaigns to get people into trading that shouldn't be trading in the first place, which is the issue to begin with. So
Yes.
I think there was no need to have the percentage of losers thing, but if that was the price to pay to get the leverage restriction, then so be it, because I think it's done an awful lot of good in the market, and it's driven a lot of the shysters away from the market as well. So whilst I think it's bollocks I think the percentage of winners or losers is the misguided way to measure it, and I think we're planning, isn't that true, Ali, to come up with a white paper on how to actually better address this.
Yes.
I think I can totally live with that as long as they keep the leverage restriction. That's the long and the short of it.
Yeah, and to sort of add a bit more meat on the bones of that argument, the having disclosure is nice. It's good for information like this to be publicly available, but
Yeah.
the construction of it is fundamentally flawed, in my opinion, because if you consider the volatility of the markets and the reporting timeframes, rolling reporting timeframes that have been instituted to get this figure published,
Yeah.
you're really, there is such a strong correlation between the percentage of losing traders at any broker and
Yeah.
the volatility conditions that persist during that period of time, that you're automatically just setting it up
To fail. I mean,
to
like, I
fail.
mean,
Yeah.
like, if I reduce this to the absurd, you could just as easily write 100% of clients of this broker die.
Yeah, yeah, exactly.
Right? It's like, well, thank you very much. That's that's hugely insightful, isn't
Yeah,
it?
where can I sign up?
Yeah, no, so like, trading with this broker will, means that 100% of the clients who ever touch this will die. It's like, well, thank you very much. I know we all come with a due date, but it's not really helping me kind of come forward. So yeah,
Yeah.
anyways,
And this is
I
not,
think
not
like,
like a slanderous commentary. It's more of a, hey, we like it, but really, couldn't you do a better job of the construction of it? Because it's so important, we might as well do it properly, no?
Yeah, but I think we'll have to walk the talk. How about we basically
Let's
go back to
lead
the
by
drawing board
example. Yeah,
and we come back with a proposal on how
let's
to do
do
that
that.
better,
Yeah,
and we
let's
put
do
it
that.
out in a white paper with the data and share that, because I think that's going to be very insightful for anyone out there. And I think there are
Absolutely.
some nuggets to be taken away from that too.
Absolutely. And then on the in the other side, I suppose, like as a trader myself, like if I were to just separate myself for a second, then looking at a figure of losing traders, if I'm clued up and I've been in the industry for a while, then I'll probably arrive at assertions that we've been talking about in this conversation. But for the person who hasn't spent too much time, they'd probably look at it and assume some sort of negative.
Yeah, but that's the other one. So like, I think it also introduces distortion. So for instance, if you have a broker that does lots of equities,
Mm,
then we come out of a 10-year or 12-year bull run on equities, which
yeah.
basically meant, people were, you just go with the tide and you make money. I
Yeah.
wonder when the next thing, we're talking about after a 35% drop in
Yeah.
equity prices. So I wonder how many brokers have anyone making any money in the in the
True.
in the
True.
market.
True. True. Very true. Yeah.
Yeah. So yeah, I think we're going to propose something better. I've already got something in mind. We just have
Hmm.
to get our elbows on the table and just grind out the data
Sounds good.
and put
So
that forward.
So the next segment of this, like we'll have a part two of this conversation where we'll come back with something more concrete in terms of data to sort of, add meat to our assertions here. Right now it's just hot air, so let's
Now we're
turn it
going
into
to so rather than meat, we're going to add cohorts to
cohorts.
the
That's
to the
right.
discussion. Yeah, that's the right the missing link
Sounds good.
in this. Thanks very much, Ali.
Perfect. Thanks.